Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:28 a.m. Central Time, and I'm recording this in preparation for market day, May the 20th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's dive in and see what we're facing this morning from our overnight action. Essentially scratch. All four broad market indices are just barely positive as of the time of this cut. Really pretty much meaningless. Obviously it could go up or down by the time we open. Crude oil, though, made a significant move. It's up almost 1%. The euro is down about 0.4. Bonds down about 0.25%, and gold is also scratch. In terms of overseas action, pretty mixed. China up 0.64, Hong Kong down 0.39, Japan up 0.85, Germany down 0.2, and United Kingdom up 0.15. So pretty decidedly mixed with U.S. markets essentially scratch. Not terribly surprising for the U.S. markets, given that we have FOMC minutes today. We could see very much sideways action today until those minutes are released. And that would be the headline for the macroeconomic reports for today. In addition to that, you have crude oil inventory. So be careful of that if you're a crude oil trader around 9:30 Central. On tomorrow, we have flash manufacturing and the weekly unemployment claims. You have Philly Fed manufacturing and existing home sales. Add to that natural gas, and then an FOMC member, Fisher and Williams, both speaking tomorrow. So there's really quite a bit of activity on the macroeconomic report between this afternoon and tomorrow, and any of that could truly move the market. Now, we have a holiday weekend coming up, so Friday, especially Friday afternoon, could get decidedly quiet. So we could have a burst of energy here in the next day and a half, and then potentially go quiet into the holiday weekend. So just be prepared for that. Make sure that you have your risk parameters in place. In terms of our current volatility conditions, obviously short-term VIX still getting quite low. We got an 11.15. You have IV percentile 16.5, 18.24, so everything in the bottom quartile. No standard deviation moves yesterday. Really seems to be backing down into a little quieter period in general. Only 2 standard deviation moves in the last 10 trading sessions for the S&P. So decidedly on the quiet front. Let's see here. Let's go to our regular daily report. Not a lot of changes from yesterday. Still phase 3, looking for higher highs and higher lows. Indeed, if we take a look at the charts from yesterday, while we've had finally a confirmed breakout from this range that has been in place since February, yesterday's action was decidedly ho-hum, and we had a new all-time high, but at the same time our close was lower. So it's we're not going to make too much of this. In bullish markets, you have oftentimes, when you have a down day, it'll be kind of a tame down day, and this certainly meets that criteria. The Dow was also in pretty good shape. It also had an intraday high, and then also had a new all-time closing high, so that certainly was helpful there. NASDAQ was still a laggard. We've not had this new high yet put in by the NASDAQ, which is a concern for a generally healthy bull market. And then, of course, the Russell was very much the same. So the cousins, the NASDAQ and the Russell, have been decidedly lagging. Transportation's also been a problem. And let's see if yep, there's transportation. And, you know, you expect transportation to be leading when you have healthy markets, and this is decidedly not leading. And certainly yesterday was down fairly significant, though it has not yet broken down through support. So some mixed bags coming from that area, but we are still, all other things being equal, phase 3, higher highs, higher lows, IBD status confirmed uptrend, GMI 6 out of 6. The market posture very bullish, and all 4 indices look good. S&P and Dow very bullish, NASDAQ and now finally the Russell also full out bullish. So really nothing to be concerned from there, as you would expect. Portfolio exposure and position sizing up to 100%. Volatility based opinion giving also 100% position sizing, so everything would be normal from those aspects. And indeed our hedge risk level is 0 plus, normal with cautionary aspects. Those cautionary aspects come from the skew being up over 125. 135 would be dangerous. We're not quite there, so it's caution. You have only one now risk off intermarket risk aversion indicator firing. So we're not going to say that there's a lot of cautionary aspect at this right now. The primary thing is that, you know, prior to going into this current range, we had failed like 7 or 8 times to break out of this range, and many of these failures were just practically immediate. We finally got a true breakout with confirmation, and we'd like to see, you know, these first couple 3 days really set a tone, and I wouldn't be surprised to see a pullback to this area, and it will be critical that that support holds if we're going to truly see another bullish leg and a spring high. If we fail that support and break back down into the range, then that would certainly be part of the justification for our continued caution. So all is good so far, but we'd like to see this key support hold, and that would open us up, frankly, to drop in the hedge risk level down to just a flat out 0 if that were to hold and confirm. But in pretty good conditions overall. Our special opinions option income strategy, acceptable. Covered calls also acceptable, though a bit bullish, with some caution, using a 1-to-1 distribution between in the money and out of the money. You know, a flat out bullish, you would not use any in the money, but we certainly are currently putting on positions with a combination of in the money and out of the money in case we have another failure of this range breakout. Put selling conditions are acceptable. Consider defined risk, using credit spreads, scaling into positions until we have that confirmed breakout. And then in terms of our sector market postures, yesterday's weakness did bring some of these down a little bit. You see transportation, which we just talked about, very concerning there. Telecom and energy also not holding up terribly well. Retail has been a bit of a laggard of late, but other indices, or other sectors I should say, are holding up better, and you see that reflected. In terms of yesterday's price action, certainly financials was the hero of the day, but also utilities and healthcare bouncing back and having a better performance. Others, though, considerably more weakness. Okay, that should be enough for today. As always, if you appreciate what you're getting from the insights here, the opinions here, please like us on YouTube. And more information always available at this address and on the website. Performance matters, we get that, and we share a transparent log of the modeled trades that we discuss in the trade room. disclaimers as always. Just hit the pause button if you have need to see this in more depth. And we'll look forward to seeing you back here tomorrow morning before the market.